Welcome to the case study series in Business and Government Relations by Skilled MBA. TRUMPF, renowned for its German engineering excellence and premium quality, faced a major strategic challenge in 2013. The company made a bold pivot to enter China's price-sensitive market. This move tested its ability to balance high-end brand positioning with the realities of a value-driven, highly competitive environment. TRUMPF's experience highlights the complexities of adapting to global market dynamics without compromising on innovation or identity. TRUMPF, renowned for German engineering excellence and premium quality, strategically entered China's price-sensitive market in 2013. This move aimed to leverage their technological innovation and high-end market positioning to capture a share of the growing demand for machine tools in China, balancing premium standards with competitive pricing. In 2013, TRUMPF acquired a majority stake in JFY, aiming to penetrate China's value segment. From 2013 to 2018, they implemented this strategy. However, in 2019, JFY reported losses, prompting leadership changes. By 2022, TRUMPF faced a critical decision: continue investing in JFY or divest from the venture. The acquisition strategy aimed to access China's burgeoning value segment while preserving the premium brand's integrity. A dual branding approach was adopted, keeping JFY's identity distinct for cost-sensitive customers. This strategy sought to capture significant market share in the world's largest machine tool market, leveraging growth potential without compromising brand prestige. Post-acquisition, JFY faced a market share decline due to aggressive local competitors. Brand confusion arose from unclear positioning between TRUMPF's quality and JFY's affordability. Financially, 2019 was pivotal as it marked the first year of losses for JFY, highlighting significant underperformance challenges. JFY's market share and profit margins have steadily declined post-acquisition. Despite leadership changes in 2019, improvements were minimal. This highlights the challenges in aligning JFY's operational strategies with market demands, emphasizing the need for a cohesive approach to regain competitive advantage and financial stability. Balancing premium and cost leadership is challenging. Companies must decide between global management with Western expertise and local management with Chinese market insights. Integration of acquired companies requires careful consideration of independence. Finally, balancing short-term profits with long-term strategy is crucial for sustainable success. In 2019, TRUMPF initiated a strategic reset by installing a leadership team with market expertise. They realigned their product portfolio to meet local demands, optimized manufacturing for cost efficiency, and adjusted pricing strategies to enhance competitiveness. These efforts aim to balance premium offerings with cost leadership, addressing both global and local market challenges. Bystronic excels in premium segments, offering mid-tier options to diversify. Hans Laser dominates the Chinese market with cost-effective solutions, leveraging local advantages. Amada balances quality and value through localized manufacturing, ensuring competitiveness. Each competitor employs distinct strategies to capture market share, highlighting the diverse approaches within the industry. The Chinese market exhibits rapid growth in lower segments, driven by cost-effective solutions. However, profitability is most robust in premium tiers, where quality and brand reputation command higher margins. This dual dynamic presents opportunities for strategic positioning, balancing volume in lower segments with profitability in premium offerings. In 2022, the decision point involves two options: continuing investment or divesting. Continuing investment requires leadership changes, more capital, research and development localization, and an expanded sales network. Alternatively, divesting involves selling JFY to a local investor, focusing on the premium segment, reinvesting capital elsewhere, and protecting brand reputation. Cross-cultural management is crucial for balancing global standards with local market needs. In market entry strategy, consider acquisition versus organic growth in emerging markets. Effective brand portfolio management involves handling multiple brands across price points without dilution. Strategic patience is key, setting appropriate timelines for acquisition success in diverse markets. A successful multi-tier brand strategy involves distinct brand separation across premium, mid-tier, value, and entry-level segments. Operational autonomy is crucial to maintain each brand's identity while leveraging shared knowledge to enhance overall performance. This approach ensures each brand meets specific market needs without compromising the integrity of others. Evaluating the decision framework involves assessing financial impact, including current losses versus future returns and sunk costs. Consider brand integrity to avoid diluting Trump's premium positioning globally. Analyze strategic importance, focusing on China's role in long-term growth. Ensure organizational fit by aligning cultural and operational aspects between entities. Skilled MBA offers a rich collection of strategic case studies designed to enhance decision-making skills for future leaders. Our resources help in navigating complex business scenarios, fostering strategic thinking. For more information, contact us at support@skilledmba.com or visit our website at https://skilledmba.com. Thank you for learning with Skilled MBA. We're proud to help you explore global business strategy and cross-market adaptability through real-world case studies.